What's up, everybody? It's your boy Sat coming to you with today's stock pick, indicator help, and general investment tips. Remember, this channel is all about no face, just facts in 5. I do the research, so you don't have to. Today, we're looking at one of the most anticipated IPOs of the year, LiftOff Mobile, expected to trade under ticker symbol LFTO. The big question is simple. Is this just another IPO trying to capitalize on AI hype, or is this a company investors should genuinely be paying attention to? LiftOff Mobile is an AI-powered mobile growth platform that helps app developers acquire users, keep users engaged, and monetize their applications through advertising. Every time you download a game, click an in-app ad, or make a purchase through a mobile app, companies like LiftOff are helping make those transactions happen behind the scenes. What immediately caught my attention is scale. LiftOff reaches roughly 1.4 billion daily active users across its platform. That's a massive footprint and gives the company access to enormous amounts of advertising and consumer behavior data. In today's economy, data is money. The company was formed through the merger of LiftOff and Vungle, creating a larger player in the mobile advertising ecosystem. Since then, management has focused heavily on artificial intelligence. Their Cortex AI engine helps advertisers find high-value users and optimize ad spending, something that becomes increasingly important as companies demand more efficiency from every marketing dollar. Now let's talk revenue. LiftOff generated approximately $686 million in revenue during 2025. That's a number investors should pay attention to because growth remains one of the primary drivers of technology stock performance. The company isn't some startup with a dream. It already operates at significant scale. However, there is a catch. While operating performance has improved, the company still reported a net loss. That's not uncommon for growth companies, but it does mean investors need to monitor profitability closely. Revenue growth is exciting. Sustainable profits are what ultimately drive long-term shareholder value. One thing I actually like about this IPO is the valuation. Earlier estimates suggested a valuation north of $5 billion. More recent filings point towards something closer to the mid-$3 billion range. In my opinion, that's healthier. Too many IPOs come public at unrealistic valuations and immediately disappoint investors. A more reasonable starting point gives the stock a better chance of succeeding after it begins trading. The bull case is straightforward. Mobile advertising remains a massive global market. Smartphone usage continues expanding. Artificial intelligence is becoming more important in ad targeting. LiftOff already has scale, proven technology, and relationships across the mobile ecosystem. If management executes, the runway for future growth could be substantial. The bear case is equally important. Competition is fierce. LiftOff competes against giants with deeper pockets and larger ecosystems. Advertising spending can also be cyclical. During economic slowdowns, marketing budgets are often among the first expenses companies reduce. So would I buy the IPO on day one? Personally, probably not. I've seen too many IPOs surge, crash, and then eventually settle into a more attractive entry point. I'd rather let the market establish a fair value, see how institutions react, and then evaluate the opportunity once the initial excitement fades. That doesn't mean I dislike the company. Quite the opposite. LiftOff checks several boxes I like to see. Growing industry, AI integration, strong revenue, large user reach, reasonable valuation. Those are all positives. My verdict is simple. LiftOff Mobile deserves a spot on the watch list. Whether it becomes a buy will depend on how the market values the company after it begins trading. Sometimes the best investment decision isn't buying the IPO. It's patiently waiting for the market to reveal the opportunity. Remember, I'm not a financial advisor, and this is not financial advice. Do your own research, manage your own risk, and never invest what you can't lose. Don't forget to smash that like button, subscribe, and drop a comment with a stock or indicator you'd like me to cover next. This is Sat, and I'll catch y'all in the next one. Peace.